Good morning. We're half an hour from the open in Hong Kong, Shenzhen and Shanghai. You're watching The China Show. I'm Rebecca Choong Wilkins with David Ingles.
Good morning. Let's get to your top stories today. Stocks across the region are under pressure from the threats of a broader global trade war after President Trump flagging tariffs of around 25% on cars, chips and pharmaceuticals. It could come as soon as April.
And Baidu is in focus today after reporting its third straight quarterly revenue decline as China's AI rivalry heats up.
Also ahead here in shows, Muddy Waters founder Carson Block tells us exclusively why he's staying on the sidelines of this equity market rally in China.
As a trader, as an investor, you're losing out on this rally.
Well, I don't know. I sleep a little better at night, I'd say.
And I'm Annabelle Drawlers live at Consensus in Hong Kong, where key industry executives and players in the crypto industry and related industries are gathering. Stay tuned for some big interviews coming up. We've got Wintermute, Robinhood and the CEO of Binance, Richard Teng, all ahead.
Good morning. Welcome to the show. Before we look at your markets right now, just some breaking news coming out of the RBNZ drop and give me 50. That's what they did for the third straight time. As you can see at 375 right now on the cash rate. They're also looking at a higher inflation forecast for the year. So they've taken their forecast from 2.5% up to 2.7%. So again, just to reiterate, of course, this easing cycle is well into its cycle here. So 50 basis points again following similar moves in the past. The RBNZ also sees scope for low rates through the course of this year so far as the economic outlook, they say, has remained subdued. Kiwi dollar on your screens, on offer, 0.25%. Top of the next hour, of course, will be press briefing. More details on that once, of course, we do hear more coming out of the RBNZ. Right. And for more on the story right now and just more context, of course, you can turn to your Bloomberg TLIV Go to get commentary analysis on all these breaking lines coming through as I speak. Right. Takes us straight into the market action right now, and we are looking at mostly declines across equity markets. We did hit, of course, another record on Wall Street. We are looking at U.S. futures on the way up. There's an Intel story to tell you about, maybe mechanically, that did lift sentiment somewhat. We're looking at declines actually just about on the ASX and Taiwan coming in line. It's really where you are in Korea, and maybe to a lesser extent we are roughly unchanged over in Japan. That's keeping things honest and at least respectable as far as the Asia-Pacific benchmark is concerned. As you flip the boards and have a look at the overnight session in the U.S. on the Chinese equity front, just to mention as well, more lines coming through out of the RBNZ, that the committee, it was a consensus on the policy decision. Global uncertainty is seen weighing on business investment. We'll talk more about the tariffs in just a moment. 1.3% decline overnight. Baidu, of course, will be in focus this hour amidst the decline in the revenue from last year. Very quickly, A50 futures last we checked were down about 1/3 on both contracts to that extent. There we go. And 1.7%. That's a little bit of downside after 5 straight days of upside on Chinese 10-year yields. Very, very quickly, a ton of money coming through the Stock Connect yesterday, and this is certainly one metric we'll watch again very closely today. So the biggest net amount in 4 years coming through the Stock Connect from mainland into Hong Kong, 22 billion, that's Hong Kong dollars across the Stock Connect into the close of the session. On Tuesday, we'll watch for this, of course, very closely today, Rebecca.
Yeah, absolutely. And to your point there, of course, that premium between Hong Kong shares and Chinese shares tightening. We're watching to see whether there's any kind of correction there as well, potentially. Elsewhere on the agenda, we're looking at home prices. We have January prices. This is MBS data coming through today. Big question mark is whether or not we finally start to see signs of stabilization in the property market. And it's really the sort of bulk and boost that we saw through the Lunar New Year that we're watching for when it comes to January. We'll probably be eyeing month on month there, Dave. But just to bear in mind that actually if you want to be comparing it to what we saw last Spring Festival, you really should be looking at February last year to see the kind of difference in boost in sentiment and so on. Anecdotally, it was quite a of busy period over that break. The other property news, actually, just to keep an eye on today, is Sino-Ocean. We have this really important Hong Kong ruling, first of its kind case where a restructuring could go ahead without the backing from a major bondholder group. It could set a very, very important precedent for all the other Chinese property restructurings that were coming through. So keep an eye on that, as well as, of course, a host of earnings coming through, and we are still in the data window for the MLF to come through.
Yep, more on that in a moment. We're looking at the tariff story again with President Trump really talking slightly in more detail now on what to expect on April the 2nd, I believe is the date he just floated there. So be prepared. They are prepared to impose tariffs on things like cars, chips, and some healthcare imports around 25%. Let's bring in Derek Wallbank with us right now, our senior editor, on the details here. Yeah, Derek, April 2nd, I believe, is the date that the president has put out there. What else do we know?
Well, look, David, this is a pretty broad-reaching effort. Trump has signposted for a while that he wanted to do a significant amount of tariffs on auto imports, on pharma imports, on chip imports. So that's not necessarily the big development. The development here is a little bit of meat on the bones of that, right? 25% tariff is the idea here. Details to come. We've already started hearing about how this is going to be maybe some sort of gradual thing in there that people may need time to be able to adjust their plans. Remember, we've talked before about how these tariffs are not just trying to get manufacturing back in the United States, but are also sort of start points for negotiation. So what kind of things are these going to cover? Are these going to cover, let's say, all chips, or just maybe the best ones? Or, all of that is sort of remains to be seen. Now, April is shaping up as a bit of a big moment for tariffs. We are expecting to get a little bit more then as well when you're talking about some of these reciprocal tariffs that Trump has been talking about before that could also include non-tariff barriers. So there really is a lot of wait and see coming in here, but it is coming into some clarity for markets.
Derek, we also had details emerging over this meeting between US and Russian officials. It's probably not understating to say it's caused a real degree of sort of existential angst in European capitals, as well as, of course, we've had a response from Ukraine as well. Just tell us what we know so far about that meeting and any reactions that we're getting to it.
Yeah, the big thing that came out of me from that, Rebecca, was the idea that the U.S. really wants to get onto a path toward normalization of relations with Russia. I think we have spent a lot of time thinking in the build-up to this about the Ukraine-Russia aspect of this, but there is also the other side of the U.S. and Russia's relationships with each other, right? That has been heavily frozen. You're talking sanctions on top officials in both directions. Even things as simple as, like, are airlines allowed to fly over airspace? There's a lot of different aspects to this. And that thaw was, I think, one of the big things that we saw coming out of this, or at least the intention toward thawing. Ukraine has made no surprise about its disappointment in not being included in these talks. I noted that Trump had a little bit of a reaction to Zelensky's disappointment at not being included in there, suggesting that he had 3 years to figure out how to solve this. You can imagine the reaction that has gotten in European capitals. I'm also noting that we've talked a bit about Europe wants to have a seat at the table and have a bigger play there. We've seen Emmanuel Macron sort of step into the breach to be a leader on that, convening European heads of government, as well as trying to have talks with Trump and Zelensky as well to kind of facilitate more of the connection that Europe says they are not getting enough of.
Bloomberg senior editor Derek Warbank there for us. And sticking with this theme on tariffs, the U.S. Senate has confirmed the billionaire Cantor Fitzgerald CEO Howard Lutnick as President Trump's Commerce Secretary. He was approved with a vote of 51 to 45. Lutnick will now lead the administration's tariff and trade agenda. He also oversees a department with responsibilities ranging from fisheries management to export controls.
Right. Let's have a look at some earnings right now here. And one stock in focus will be Baidu. ADR's down about 7-8% overnight. The company reported this drop in top line, although a smaller one if you compare that to what the street was expecting. Let's bring in Min Lo, our China correspondent, to take us through the takeaways here from the earnings report.
Yeah, I think the takeaway here is that Baidu's core revenue is really still dragged down by the fall in ad sales. Its core revenue was up 1% year-on-year, but ad sales had fallen by 7% year-on-year. And I guess that's a reflection of the broader economy, the consumption slump, but also Baidu's ability to compete with some of these newer, younger players, the social media apps like Xiaohongshu and Douyin that is snatching eyeballs away from Baidu's platform. And you look at its AI ventures, it's also facing competition from the likes of DeepSeek that is built on an open source model, and Baidu has been pouring huge sums of money to try to push out its own proprietary technology, and it's getting squeezed there. It recently announced that it was going to make the Ernie chatbot free, refunding that $8 a month subscription fee. So also facing problems around monetization of some of these technologies, and the only thing that was bolstering the numbers in the last quarter was the demand for cloud computing. So its cloud revenue was up 26%. This is driven by that increase in development activities, services provided to startups and developers who are chasing after computing power. But bear in mind, this is a segment that has very low margins and may not be enough to offset that weakness in ad revenue. But Baidu is saying it still will focus on doubling down on developing or discovering that killer AI app, which they say has not yet emerged in the current landscape.
I mean, Dave and I were chatting yesterday about the tech symposium. It's been largely taken as a sort of positive signal for the private sector, but another way of interpreting is also this call to arms from Beijing for Chinese companies to kind of get in line. And we now have had these lines, in fact, from Xiaomi saying that Chinese companies as a whole may unite better when encountering external pressures. I mean, just tell us a little bit about what this means and why we're seeing statements like this coming from Chinese firms.
Yeah, I mean, it's interesting. This was at the sidelines of the symposium yesterday, and some of these entrepreneurs were giving interviews to state-affiliated media. So this was a post that was posted on Chinese social media account Weibo on an account affiliated to state TV. And Lei Jun is there saying that, they will be able to better counter external pressures if they come together. You have other tech entrepreneurs saying that this is a message from the government for them to overcome all difficulties. And it's also a sort of morale booster from the government, a pat on the back. The government saying, keep doing what you do, keep showing us the innovations, the breakthroughs, because the private sector contributes to more than half of tax revenue and more than 60% of economic output. And really, they have been the one that have been at the forefront of all of these breakthroughs when it comes to, DeepSeek and the like. And it comes amid this tech rivalry with the United States, the export restrictions, the chips restrictions, and I guess it's, as you said, that call to arms, calling these entrepreneurs to get in line with the government's vision for the year to push forward with their breakthroughs in the new productive forces.
Min, thank you so much. Min Lo, there, our China correspondent. One stock to watch going into the open today. I've not really seen much on pricing right now. That could change, of course, these next few minutes or so. Right, just to recap, that rate decision at the top of this hour, the RBNZ cutting by 50. Again, they do see scope for more moving forward, and just, of course, keep in mind that we have a press briefing, a briefing out of the central bank, 3 p.m. out of Wellington. So that's in about, that's a long version of saying that's going to be in 45 minutes from now. Keep an eye on that. Lots more ahead here on The China Show. Good morning.
Good morning. You are watching The China Show. And here in Hong Kong, the annual Consensus event is getting underway, bringing together top companies in blockchain, digital assets and Web3. Let's cross over to the conference where our tech reporter, Annabelle Jewellers, is standing by with our next guest.
Thanks, Rebecca. Yeah, well, this might be sort of the magic of live TV behind us, because it just had a dragon dance that started here. But we will bring in our next guest. This is the Wintermute CEO, Evgeny Gaevoy, joining us this morning. And thanks, and I hope you can hear me over the sound of this as well. But we were just talking before there in the ad break about the market moves that we're seeing in crypto. And you were saying, and you've made the point on X as well, that you don't really feel like crypto markets are pricing in the SEC reform in the US just yet, but what are you expecting then to happen?
Yeah, I think the crypto native crowds, and first of all, thanks for having me, despite all the noise. I think the crypto natives are not necessarily pricing in like all the regulatory improvements that are coming up. Like there is an overall over focus on meme coin mania, and all the recent news with Milei, for example, and like SEC, CFTC has been such a big drag, for a lot of better word, on the industry before, and now it's definitely getting better.
So, what do you see as being the exact regulatory roadmap? What would the steps be that you would expect in, say, 2025?
I think it will go in multiple steps. So to start with, we do expect a lot of better lawsuits, a lot of negative things to be dropped, primarily against the token protocols, basically tokens being securities. Like we've seen some ideas being floated from SEC side, for example, on that side. More in the long term, it's all about regulation. And what's really interesting about regulation is basically whatever US comes up with, whatever new regulations US come up with, quite likely will be copied, quite likely will be replicated by other countries throughout the world. So if that regulation is going to be conductive and useful for crypto businesses, I think that will be conductive and useful not just in the US, but like in Europe, for example, in Hong Kong, and well, everywhere.
And so how is a business, how is Wintermute preparing then in anticipation of the regulatory changes in the US?
Yeah, generally we're doing quite good. We had a very successful last year, and it's all about basically expanding even more. Like part of it always has been on Asia side, but now we have a new added focus on US. We are looking to expand in the US with our OTC offering. We are looking to expand in the US with derivatives offering as well on the OTC side. And yes, there's definitely a sense of thinking how to expand properly in headcount. So we are looking to open a New York office, for example, as well sometime this year.
So a New York office, you want to expand the product offering, and you're looking to add headcount. What's the size of the headcount that you're expecting exactly?
I think we initially thinking about like 5-10 people. Like we traditionally prided ourselves on being quite nimble. We are currently just 130 people, and which is pretty small given like all the things that we are doing in crypto. And I think it's going to be 5-10 people, primarily on business development sides, a bit on the venture side, a bit of operational side, no trading yet.
And so just to clarify, when exactly are you looking to open that office in New York?
We're currently doing the homework on,
okay. So you are going to the US soon. I mean, are you looking for sites, for instance?
Yeah,
where are you?
We just started, yeah. I was in New York literally a few weeks ago.
Okay, and so against that backdrop, the other thing that we can also sort of talk about is what we're seeing in meme coin activity right now. I mean, we know that Javier Milei from Argentina, of course, the leader there is really wrapped up in this Libra controversy. But what do you make of all of the meme coin activity generally?
Yeah, I think it's kind of a big drag on crypto at the moment, just because of the sheer amount of new tokens being released into the space, and they basically take up liquidity from existing tokens for sure. Like we've seen this effect probably is the most pronounced with Trump launch. When Trump token launched, it went up to pretty significant market cap, but it basically saw a massive sell-off and pretty much all meme coins on Solana because of that. And that's kind of the effect that we see with a lot of other meme coins and generally in the space, that it's not a zero-sum game. It's if a new token gets launched, it basically drains liquidity from the existing ones. And that's basically the main challenge. And it makes it really hard to grow the whole space in general, because it's just a very much zero-sum negative game for in a lot of places.
So how does it impact a business like Wintermute then, directly or indirectly?
Well, our core strategy is to be where the volume is. So meme coins have been active for like almost a year now. So we have been a very active participant on liquidity provision side, on the prop trading sides, even on OTC sides. So we have not been left behind with this. But that being said, yeah, we have a lot of parallel businesses very successful in crypto as well.
I want to ask about something else that you've responded to of late, and that is these market narratives around market makers and the impact that you can have on trading activity. And you've spoken about maybe some misconceptions, but can you explain that in a little bit more detail?
Yeah, I think it's kind of related to what I said earlier. Basically, there is a pretty big drag on prices from basically on all the existing tokens from all the new tokens being launched. And basically what happens in life cycle of a typical meme coin is it basically gets to a certain valuation. At that point, the team behind it starts talking to market makers, they start talking to exchanges like Binance. And basically once they get listed on Binance, once they onboard Wintermute, for example, as LP, that's typically when a lot of people start selling this token to basically buy into something very new. And so there is a sort of like false correlation, or false like correlation causation problem with people thinking, okay, token is listed on Binance and this is going down, that must be like Binance doing something to it, or it must be Wintermute doing something to it, without them understanding that's basically almost the conclusion of the life cycle of the meme coin in a lot of ways. So they need to, so it's not about that, it's just about the meme coin gain in general.
All right, Evgeny, thanks so much for your time. That was Evgeny Gaevoy there, the Wintermute CEO. And David, the lion dance has finally moved on just as we end this interview as well.
Yeah, what a good way to back-end that. Bookend that interview. Bell, thank you so much. They mentioned Binance, so why don't we ask them? We'll ask Binance, of course, joining Bell there later on, as well as Robinhood. So yeah, lots more good conversations coming up out of Consensus throughout the course of this morning. Right, from Binance, we're going into the open today, and we're looking at Baidu. Down in your pre-markets, markets are down this Wednesday. Plenty more ahead. This is Bloomberg. Right, welcome back. You're watching the China Show. I have 45 seconds to do this preview of January home prices. Well, I now have 40 seconds because I wasted time on that. Prices, in terms of the number of cities, we're seeing a price pickup month on month. In December, actually the most in about a year and a half, 23 cities. The other thing we want to point out is in terms of price itself, the next chart's going to show you that as well. The smallest contraction year on year, going back, of course, to early 2023, when we did see, of course, that initial salvo to support the property market. Of course, it's not apples to apples because this is January data that's coming out. The Lunar New Year holiday was in Feb of last year, so just keep that in mind when the numbers break in the next few minutes or so. This is the China Show.
Good morning. Welcome back. You're watching the China Show. We are counting down to the open of markets, about 30 seconds or so away from that. It does look like we are seeing a little bit of weakness coming through. Of course, we've opened the day with, fresh news and a little bit of clarity over these potential sort of extended tariffs coming in from the US when it comes to pharma, when it comes to autos. And we are also watching for home prices, Dave.
Yep, should be out. This is the January set of numbers. Should be out in about 10 seconds or so along the open, so we'll break the numbers to you once they cross the Bloomberg terminal. Broadly speaking, of course, equity markets across the region, with the exception of Korea, downdraft we're seeing across most names right now. As you can see, the mainland's down. We're down here in Hong Kong about 0.1%. There we go. Okay, while we wait for the numbers to come through, just to tell you about the bond rally has really hit somewhat of a speed bump in China, and might that have to do with the fact that some people are reallocating away from a bond market that's really done very, very well to an equity market that has done very, very well only recently. So we'll see whether that dynamic continues, and certainly the backdrop economically, when you look at the home prices, which should be out soon, is really one where there is still a lack of price pressures that might actually provide a floor underneath this pullback in bond prices. Bottom of your screens are some of the big A shares listed there. Nothing much to tell you about as far as that's concerned. We did have earnings, of course, coming out of Baidu yesterday. That's the next board that's coming up, the Hong Kong Open. HSBC, IMAX China, Hang Seng Bank are those set to report later today. Just watch for those very, very closely. Certainly any detail on certainly headcount and restructuring out of HSBC is going to be very much in focus. The buyback's obviously always a feature there of late. Tencent is down about 1%. Baba's down 2.7%. Baidu is now down about 4%. So in case you don't see Baidu, Baidu is bottom row, third from the right. And we now have new home prices coming out soon. I'll get to that very, very briefly. Very briefly before that, though, just some changes to analyst ratings here on the Baidu story. The three latest there we go, on your screens. Buy at Jefferies, outperform at Daiwa, and buy at Citi. Rebecca.
Yes, home prices coming through now. So January home prices, this is new home prices, fell by 0.07% month over month. So that is a 20th straight month of declines. It is marginally better than December, which came in at 0.08. But given that we were hoping to see this boost potentially because of the holidays, the Chunjie holidays, where we typically expect to see a little bit more positive momentum on buying. We see a lot of deals and sales that go through that period. Potentially quite disappointing to see this number. Yeah. We'll get to more reaction on this a bit later on in the show. But certainly the course of travel seems largely clear. Things are getting less worse, and maybe at some point we'll get a month-on-month positive print there later on. Dollar China on your screens to the weaker side of the equation from the cutoff this morning. Let's pivot back to the equity markets. This world-beating rally in Chinese tech, growth names. Let's bring in John Lin. He's Chief Investment Officer of China Equities at AllianceBernstein, joining us this morning. John, first, good morning, and hope you're well. And I would imagine your strategies have been doing well of late. How have you been deploying your money recently?
Yeah, first of all, good morning. Good to see you. Mm-hmm. Yeah, I mean, how much a month has changed in terms of sentiment? So if you invited me a month ago, it would have been doom and gloom, and right now things seem to be picking up. I think what's changing is not so much on the ground fundamentals. I should point it out earlier in the segment, if you look at bottom-up different industries' numbers, they are getting marginally less bad, but not seeing a huge recovery. So what we're seeing really, this rally is really a combination of the pivot in stimulus stance that began in the fourth quarter last year. I think plus the announcements of DeepSeek that took place 2-3 weeks ago, that sort of reminded global investors that China remains the interesting place to find good companies, and it's not a story that you can completely write off. Equally, from our point of view, we are not really changing a ton from what we're supposed to do, which is find good companies for the long term that are maybe trading at a valuation that they don't quite deserve. Whether it's some of the beat-em-up consumer companies or parts of, for example, smaller ADR space, that's also forgotten by global investors up until really the last few weeks. And so some of these areas remain really attractively valued from our point of view.
John, how game-changing is the DeepSeek development? I mean, how much upside are you seeing that being added to all the adjacent sectors, the adjacent tech names around AI?
Yeah, it is a pretty significant development from our point of view, not necessarily from sort of let's buy the latest, sexiest, most expensive, high-flying AI name, but I think from a point of view of reminding investors that China remains an interesting place for innovative companies. I think if you rewind the clock back to the middle of last year when the market was most depressed, the discussion was really centered around whether China is investable at all. Our point of view has always been, of course, China is investable. But if you go back to the basics, what we're supposed to do, I'm an equity guy, so what we are supposed to do is to find good companies on behalf of clients and buy those companies at a good valuation. And the first step of that equation is find good companies. So the question becomes, is China a place where you can still find good companies? And I think what DeepSeek reminded global investors is, yes, of course it is. The generative AI development, rightly or wrongly, right now, really 2 countries in the world have come up with products in U.S. and, of course, China. China is often not the place where some of these new technologies are invented, but like EVs or like solar panels, what China has been pretty good at is to throw engineering hours at a product and then incrementally make them better over time. And that, if you combine with the large end markets like electric vehicles, like solar panels, tended to be a pretty good place for large dominant companies to emerge over time. So, to answer your question is, yes, we think it's a significant development, but more significantly, it's probably not so much just AI, but to remind global investors that this is a place still good to find good companies.
Right. So what are you looking at now? Where is value for a value investor like yourself these days? 35% into the rally, valuations on a benchmark basis back to the 10-year mean.
Yeah, so a couple of places. So even staying with the AI complex theme, for example, and this is a theme that's been well mined in the Western market, if you will, but not so much so yet in the Asian market or in China. And that's things like the pick and shovel stories related to AI. AI is ultimately not the same business model as a software business, right? I mean, if you write a copy of Microsoft Excel, for example, the next copy you sell for the same software has almost no variable incremental cost. But for AI, the next query you send has the same power consumption as the next 2,000 queries individually you're going to send, right? And so things like being able to find power producers or the electric equipment providers that provide the equipment you need to upgrade the entire grid so that they can support the demand, extra power demand from AI going forward, remains an interesting place to find some of the ideas. And I think a couple other places are interesting. One is this smaller cap part of ADR that I was talking about. Some of those companies, whether it's in consumer lending or whether it's in things like social media, had really been quite forgotten by global investors. And even after the rally, we can find companies in that space trading at something like 5, 6, 7 times earnings going forward. And keep in mind that the bottom-up fundamental story, the earnings pictures, are also getting better. And then the last place is probably some of the Asia companies. I think a lot of the global focus has been rightly on sort of large cap Chinese internet companies, but they are a set of hardware companies in the Asia space that also provide, whether it's PCB boards or server assemblies, and these are also really good ways to get exposure into rising Chinese AI demand.
John, just before we let you go, I want to ask about geopolitics and tariffs. In 2024, 1.5 points of the GDP growth, that 5% GDP growth, came from net exports. We're, of course, expecting a hit to that when it comes to President Donald Trump. Is your assumption that the MPC is going to do enough, is going to stimulate enough, put in enough fiscal support to make up for that shortfall?
We tend to think that China needs more stimulus. It needs more forceful stimulus. And then the place where Chinese economy needs most stimulus is in consumer demand. And so you're right. I think additional tariff, if they were to continue to come, will be a drag on Chinese economic growth. And therefore, the demand or the need for a stimulus does pick up. Whether it's the MPC or not, we're not necessarily so concerned about political calendars because, frankly, at this point, we believe that the Chinese government can and will roll out stimulus measures when they see they are necessary. It's not necessarily tied to MPC or a political meeting, a month end, etc. And we certainly do not position our portfolio, according to the political calendar. But I do agree that more stimulus is needed.
John Lin, Chief Investment Officer of China Equities at AllianceBernstein there. There's plenty more ahead. We're back at Consensus Hong Kong next. This is Bloomberg.
Welcome back. You're watching The China Show. Good morning to all of you joining us from across the region. Let's take it straight back now to Consensus Hong Kong, one of the key digital asset, blockchain, and Web3 conferences taking place right now. And Annabelle is, in fact, there at the conference, and she's standing by with her next guest. Belle.
Thanks, Dave. Yeah, I'm joined here this morning by the Robinhood Vice President. This is Johann Kerbrat. Thanks very much for being with us today. So you're in Hong Kong really for quite a short time, but talk to us about the message that you're bringing to the conference.
Yeah, no, we are really excited to be here. I think it's important after last year and seeing, that there is a lot of enthusiasm in crypto, and so it's really good to see how much people are here, and we are excited to come after our earnings. We saw that crypto volume have increased 400%, and so for us it's been a good year, and we want to capitalize on it.
Yeah, we can get to the earnings in just a moment, but in terms of capitalizing on crypto flows in particular, this is really a US story, and it's a US regulation story as well. So what are you anticipating in terms of that roadmap for 2025?
I think for us, what we are focusing on is really building for the future. We know that we can work with regulator. Robinhood is already regulated by FINRA, by the SEC on the brokerage. On crypto, we are regulated by the New York DFS. And so we know that we can work with them. So we are excited to see that the new administration want to work with crypto companies. They created this task force as well on the crypto side. And so we think that, with them, we can actually build a bill that will help everyone to offer crypto to, safe way to customers.
What does that look like exactly? What is the work that you're doing with the task force, for instance?
I think right now, we're waiting for them to set up the task force and set up draft, and we will comment on the draft. But what we think is exciting is that, there is a clear will for them to work with industry. We saw a lot of funders coming back to the US, for example, and that I think is a good message because, in the past year, we were actually seeing the opposite, where people were leaving the US to build crypto in Asia or in Europe. So right now we're really excited to be able to build on top of that.
And are you making any sort of business changes in anticipation of that? For instance, new teams maybe, new headcount? We've always been really focusing on building a product that works with the volume in the market. So we actually launched Robinhood Crypto in 2018 when it was really the winter. And we've been able to always kind of develop more features for when it's time for people to actually reuse it. But since the administration changed, we actually added more crypto. We added 7 assets, and we are planning on doing more of this because for us, I think it's really important to offer what people are asking for. When you think about what people are asking for right now, of course, a lot of the action has been driven by meme coins. Yeah. What's your policy on how you add meme coins?
Yeah, so we have a listing framework and a listing committee that meets and kind of review a lot of points for every asset. So, from compliance, operations, security, on the engineering side as well. But at the end of the day, a lot of it is coming from customer demand. And, we've seen a lot of customer demand for some of these points. And we're trying to make sure that we can offer what they're asking for. At the same time, we also offer a product called Robinhood Wallet, which is a self-custody wallet where people can have access to a lot more of the assets. And so, for us, the goal is going to be to offer a fewer list of coins on the platform, and it will be a bit more limited. But if you really want to access anything on Web3, you can use a Robinhood Wallet for that.
It's a fine line, I guess, so sometimes between offering what customers want and also offering tokens that offer some sort of value or utility. So Trump token, for instance, you added in the last couple of weeks, you said, and it's sort of unclear exactly how that would be used or what its purpose is. So how do you weigh that up?
Yeah, I think it's a combination. I think in some ways the meme coins have been also a very good introduction to crypto for a lot of people. We've seen people starting with a bit of Doge or a bit of Trump, and then getting more interested in learning about Bitcoin or transferring to a wallet and doing more things on Web3. And so I think for us, it's important as a platform that we are agnostic about the asset. Like, we don't want to make decision for the customer. But if customers are asking us for something and we feel like we have a way to offer it safely, we'll do it.
And I guess as well, you've got, as you mentioned, going back to those earnings, because you did have over $1 billion in revenue for the first time ever, or at least as a public company. So what is the plan to grow the business? Because again, that is quite an aggressive expansion policy or strategy as well.
Yeah, I mean, Q4 was very good for the crypto business, but I think, to your point, it was a combination of all the businesses at Robinhood, and I think that's the strength of the company, that we don't rely on just one business line. But at the end of the day, I think we have a lot of advantages compared to some of our competitors. Being able to be one app for all type of asset class. You can have a retirement account, a brokerage account, and also crypto on one platform. It's really important.
And what about in terms of trying to grow the market in different areas as well? What's your plan for different geographies?
Yeah, so we have the international expansion. We launched the brokerage in the UK last year. We also launched a crypto offering in some countries in the EU, and we also announced the acquisition of the company called Bitstamp that has licenses in many countries. So for us, I think it's going to be part of it. We want to grow the business internationally on top of all the new business lines that we are developing.
Tokenization is an area that we obviously have heard a lot about. A lot of people have discussed it. We still haven't seen any projects maybe getting a lot of demand just yet, but what's your outlook for that?
Well, we actually think that Robinhood is at the perfect crosspath between traditional finance and crypto, so I think that's something where we can do a lot to help bring tokenization to life. But I actually think that, there has been use case of tokenization. The stablecoin, for example, is a perfect example of tokenizing the US dollar, and we've seen a lot of adoption, not just in the US, but also in other countries that want to have exposure to the dollar, or also from institutions like us to use stablecoin to actually help move assets on the platform a lot faster. So I think we will see a lot more of that, and I think Robinhood is very well placed to have a play here.
Predictive markets as well, it's not something exactly in your purview, but still this is an area where Robinhood has faced some issues in the past. I'm thinking here about the rollout with the Super Bowl, for instance. What exactly happened there, and what's the plan moving forward?
Yeah, I think we talked a bit about it multiple times, but I think for us, we were obviously disappointed that we had to roll out the pro football contract, but I think our plan, like we mentioned in the past months, has been to roll out a comprehensive platform, and we want to make sure that we can work with the regulator to offer products that are exciting for both the customers and for people working on it.
All right, Johann, thanks very much for your time this morning. Enjoy the rest of the conference as well. That was Johann Kerbrat there. He is the Robinhood Vice President. Dave, Rebecca.
Annabelle Jewellers there, our Bloomberg tech reporter from Consensus. And in the next hour, we'll also be hearing from Binance CEO Richard Teng on his outlook for Bitcoin and the firm's outlook after the jailing of its founder, Changpeng Zhao. There's plenty more ahead. You're watching The China Show. This is Bloomberg.
Right, welcome back. You're watching The China Show. Speaking of tech, a couple of stocks that we're tracking here as well. So China Best Group, I think the stock is up. Not sure. That's the highest level there in about 2-3 years now. There's this joint venture between a company and Data Robotics going into this framework agreement to form a JV in Hong Kong that looks into humanoid robots. But there we go. That's what it does, of course, when you get that sort of news. Mengniu, dairy producer, and back to the earnings story here, also coming in with rather encouraging numbers. And as you can see, the stock is responding, up about 9%. Now, we talked about the property numbers, which came out earlier on. And just to recap, so things are actually getting less worse or less bad From December to January, so two charts we're looking at here. So you put those two things together. December and January actually saw home prices, the smallest contractions, plural, in about 2 years or so, going back to the start of 2023.
2022 actually is when we had that first bump up. In fact, the only bump up in positive numbers. But yeah, again, even when we think about new home prices and how they're falling, so falling in 42 cities versus 43. Home prices falling 0.07 versus 0.08. So you're just seeing this tiny, tiny marginal improvement. But the expectation is that towards the second half of this year, we might finally start kind of perhaps entering some of that positive territory. Big question over whether or not we can actually essentially call a bottom to the property crisis.
That's a good point. Yeah, I think when we pose that question to our guests, it's certainly not a single-month data set that is convincing them, right? They need to see a few more of this much. And I think this goes into market psychology as well, right, and market behavior. Once people are convinced that things are actually then picking up, this turns quite quickly. It might be a latter part of this year's story. There's
still this question mark over which developers are going to be able to survive or not, because that's been a big part of this story. People have been concerned. I don't want to buy an apartment from an Evergrande. Or even when we think about strong names, Country Garden, names that we never, ever thought would be in this sort of state of distress.
And the jury's still out, really, on some of those big names as well. The other thing we want to point out, too, I think there's another chart here to Rebecca's point, so lesser cities, or if the opposite is true, right? So more cities right now. So from 23 to 24 cities month on month, from December to January, actually saw a pickup in new home prices, the most going back to early of 2023.
Yes, well, anyway, keep breaking down all of those numbers. Stay with us. You are watching The China Show. Good morning. Welcome back. You're watching The China Show. Let's just take a look at the HSI about half an hour into the session. We are coming off those lows in very, very early trading, but still down about 0.6%. And in fact, it's a similar pattern that we are also seeing in the HSCEI, coming off some of the lows we saw just really going into the first sort of few minutes of trading of the day, but still down. If we can just flip to the HSCEI, still down, at least I'm seeing on my screen, about 0.7% there, Dave.
Yeah, not as bad as we started out the day. And I think the other point we were pointing to earlier on was really keep an eye on these stock connect flows southbound from the mainland, because that, where that goes tends to really drive the price rally short term. And really yesterday was the biggest amount in some years.
In 4 years,
In 4 years, yeah.
So, to your point, we saw quite a big bump up yesterday.
Yeah.
Perhaps a little bit more, laid back on a Wednesday.
Yeah, well, high base to compare that to as well. The other news as well across these markets right now. So before we talk about the RBNZ and the meeting that took place there and the briefing that is about to start, some lines coming through out of the BOJ, and as you can see, the yen is actually moving on that news right now. We're on the weaker side of the cutoff, and certainly we're well off the lows of the session. Initially, though, was the drop lower, and then this reversal to the upside here. A commentary coming through really more on the hawkish side of things, right? There is the need, of course, to check about the economic impact, but that being said, the direction of travel seems to be very clear as far as the Japanese, and a lot of the economic numbers that have come out recently. When I say recently, the last 2 weeks or so, because we are, of course, in the time of the month in Japan where we're getting really a lot of numbers coming through. I just mark your calendars now. In exactly a month's time is the next BOJ meeting. So keep an eye on that. The target rate, March 19. Okay. We don't have to look that forward right now to look at where the RBNZ is. A couple of hours back, they came out with that decision, another drop of 50. So following a 50-50, I think they started with 25. But certainly they've taken rates down a lot. And the signaling from the RBNZ is that there is scope for more. Certainly markets are pricing in, I believe, 3 more rate cuts this year. And my producers will correct me if I'm getting that one wrong. I think it's 3 cuts, but I'm not quite sure, of course, in what size of the cuts are going to come in as well. Yes, thank you so much. There we go. live TV, fantastic. So 325 basis point rate reductions are further priced into this market. Right, very, very quickly, Asia excluding the Chinese market that's coming off lows. You know what, you can look at this, just pay attention to euro-dollar, which is indicative of risk appetite turning quite positive. And of course, S&P futures following a decent session overnight is seeing further gains right now, 61.44 on the most active E-mini contract right now here in the Asia Pacific. Okay, we'll table these markets right now and we'll take you straight back to Consensus. This conference, of course, that's taking place here, all things virtual assets, blockchain, Web3. They're in Hong Kong for the first time, and our reporter Annabelle is there with her next guest. Belle.
So are you based in Hong Kong?
Thanks, Dave. Yeah, I'm joined here this morning by Richard Teng. He is, of course, the Binance CEO joining us this morning. So thanks very much for your time. But I want to start off with your sort of broad view on what's happening in the crypto space right now, because, of course, we saw that rally in anticipation of Trump entering the White House in Bitcoin prices particularly. We've given up of late, and we've sort of been a little bit steady in the weeks since. So what are you making of that?
Well, I think 2024 has been a fantastic year for crypto, right? We started 2024 with the approval of ETFs in the US and subsequently around the world, including in Hong Kong. And that momentum's carried throughout 2024. The institutions are coming through, and in this space in the past has always been dominated by retail. Last year we saw huge institutions starting to embrace this space. We saw mainstreaming starting to take place on that front. And the year ended with the election of a pro-crypto president, President Trump, right? And that gave good optimism into this space. And I predicted it's going to be the start of the golden era of crypto. I think that momentum continues. Last year, we started the year with 170 million users on Binance. We ended the year with 240 million plus users. So we added 70 million users in the course of the entire year. And our institutional users actually more than doubled last year. So it's a fantastic set of results. And this year, by now, we have reached 260 million users globally. So we are the largest global crypto exchange on that front.
What does the golden era of crypto look like to you, though, specifically?
Well, if you look at the past 4 years under the Biden administration, Operation Choong was in progress, right? So there's a bit of oppression in the US, and US players, global crypto players are facing great uncertainty. And governments around the world are not really very supportive of crypto. I think we have a fresh reset and restart now. Since President Trump's election, actually we have gotten a lot of approaches by governments all around the world to say, hey, we want to look at this space now. By the virtual fact that US has appointed the AI and crypto czar, represents that these are the two most important industries to support all future sub-economies around the world. And we are seeing fresh optimism. Governments around the world are supporting it.
So you're talking directly with the SEC then about what the regulatory roadmap could look like? Or are you talking with the Trump administration directly?
Well, we give inputs to governments around the world. I think they value our inputs because we are the most regulated exchange by now globally. We are regulated in 21 different jurisdictions.
What does your input to the US government look like? What do you want to see there exactly?
Well, so on the US front, you see very thoughtful appointments, right, in terms of the different lead. David Sachs as AI and crypto czar, the different appointments to the different agencies, regulatory agencies on that front. And they want to come out with a very good framework. So it's still early days, but as and when there are firm proposals, we're very happy to give inputs on that front.
But what exactly do you want to see, though? I want to understand what would bring you back into that market. What is it exactly?
Well, I think for every country, they have their own concerns, their own interests to take care of. But we want to see a framework, regulatory framework, that is, on the one hand, managing the risk aspects of the industry. On the other hand, very supportive of innovation and growth aspects, right? If you just focus on the risk aspect of it, you're missing out on all the new innovation that's coming in through this space, right? And it's a very dynamic space on that front.
Do you think that the US is going to take a more business-friendly approach, or do you think it's going to take an approach that's higher on consumer protection? Because I think you've kind of got to go down either VARA, for instance, in Dubai. That's one that's more business-friendly, for instance. Hong Kong, a bit more on the consumer side.
I think the US is going to come out. And this is only my speculation. Is it going to be a bespoke framework that really supports innovation, supports growth, but at the same time protect consumers? And all these different aspects are extremely important.
So if you get that kind of framework that's bespoke, is it enough to bring you into the US market?
Well, we always consider our global deployment, right? So we are holding a watching brief on the US. We need to see greater clarity coming out from the US, and we'll consider our options at that point in time.
And what would that look like to you, for instance?
It's too early to speculate. I don't wish to speculate at this juncture.
In terms of the headquarters as well, this has been another sticking point, I guess, and it's been something that we haven't known. What are your plans around the headquarters for Binance?
So since I took over in November 2023 as CEO of Binance, we have gone about institutionalizing the firm. So it's moved from a CEO-led, a founder-led firm, to a board-led firm now. So we have appointed our board of directors, 7 members, including 3 independent members and an independent chairman. So it is part of that transition, given the direction of travel, is one towards much more compliance. So we have invested heavily into compliance the last couple of years as well on that front. The headquarter question is something that we take time to consider, because you have to understand it's quite delicate on that front. There are many different areas that we need to consider from a tax perspective for the company, right? Whether the countries have enough double taxation agreement, whether we can base local talent there, the headquarter functions that we need to base, what's the regulatory framework that's in place, and whether it can support our global business. So there are different dimensions that we have to consider, and the board is taking, a very careful approach in selecting the headquarters.
What's the timeline, though, to announce it?
I think as and when we are ready to announce, we will do so.
How many are on the short list?
I would say a couple at this point in time that are in serious conversation, and hopefully we will land on a headquarters very soon.
So you have a couple of different locations that are on the short list.
Under careful consideration.
2, do you mean specifically?
A number.
Where are they?
Well, I won't speculate, right? So again, our conversation with all these countries are private confidential. So it will be quite remiss of me to highlight any of the jurisdictions.
What are the conversations you're having with Hong Kong in particular?
Well, over the past 2 days I've been here, I had very thoughtful discussions. And I think there's a fresh reset in Hong Kong in terms of the thinking of how best to support the crypto and digital assets framework and agenda. There's a new ambition, which has been articulated very well by the Financial Secretary in his opening in consensus. And in my conversation with policymakers, the regulators here, I do think there's a fresh attitude in terms of trying to support the innovation part, enable much more building development from Hong Kong, much more activities. Hong Kong has always been a trading hub, a global financial hub. But in terms of crypto assets, right, it is still at a very early stage of development. So I think they are having a fresh relook at this sector and see how to support the growth.
What exactly needs to be reset? What's missing right now?
Well, I think the first set of rules that came out, I think right about 2020, are not quite fit for purpose for the crypto, because you have to understand global crypto players have options, right? We are licensed in 21 different jurisdictions by now, and institutions have options on where to trade from.
What's the biggest
So you have to make it, sorry, let me finish that. So you have to make it very conducive for players like ourselves. Any point in time, we have more than 40% of market share globally, and we bring global liquidity pool on that front. So if you want to bring institutions, the serious money, people that to trade through Hong Kong, it must, match the best standards out there in terms of regulatory framework to accommodate all this innovation.
What's the biggest pain point then? Because you haven't officially applied for the license just yet. What actually holds you back? A custodian, for instance, that those requirements have been a challenge for some here?
Well, when we look at it the last time round, there are a few key challenges, right? So for example, you only allow for spot trading. You don't allow for futures trading. And futures derivatives trading is a big area. You only allow for up to 20 tokens, even for trading among institutions, and that's far too little to make it commercially viable. So there are quite a number of pain points that we have gone through with the regulators, and they are aware of those pain points. and they have taken that into account. So we hope that the next iteration will be something that's much better than what we saw in the past.
All right, it's always that balance, as I said, between the consumer protections and also making it friendly enough for business as well.
Absolutely.
That was the CEO of Binance there, Richard Teng. Annabelle Jewellers there, our tech reporter. And if you're a Bloomberg subscriber, you can catch up with all our interviews, Binance and beyond, by using our interactive function TV Go. You can also join the conversation by sending instant messages to our team and our guests during the live show. Please go check it out at TV Go.
Right. As Bell was having that conversation with Binance, the RBNZ has really laid out the path for lower rates, 2 lower rates ahead. In fact, right now, the governor is answering questions, and I think he was answering the questions from one of our colleagues there who put this, effectively asked what the next moves are going to be, and paraphrasing. So 25, expect the size of the future moves to be smaller than the 50, and assume 25, a reduction of 25 in April and in May. So that totals to about 50 by about mid-July. Yeah, the Kiwi dollar, interesting enough, is coming off lows right now, so 0.1%, well, 0.2%. To the downside, we were down as much as about 0.3, so closer to 0.5% earlier on. Right, plenty more ahead on these evolving market stories. Right, welcome back. Straight back to Wellington right now, and as my colleague Francine just pointing out there in the promo, context is key. More context really on the comment coming through out of Adrian, or he was answering a question and not volunteering specifically the information here on the size, the scope, and even the timing of the future rate cuts coming out of the RBNZ following the move of 50 earlier on. So smaller cuts ahead, expect 50 more by mid-July. Let's bring in Mark Cranfield for Market Context. He's with our MLive team, joining us out of Singapore. Mark, anything stand out to you? Anything new out of the good governor?
Yeah, I think he is what you might describe as being cautiously optimistic on the outlook for the New Zealand economy. So I think traders will read this as meaning that interest rates are probably not going to go as low as they thought before today's RBNZ meeting. So if you think of what the path, people have been pretty bearish on the New Zealand economy, understandably so, the fate of the New Zealand dollar, and to some extent expecting interest rates to go below 3%, possibly even by the end of this year. That is looking less likely now. If you look at Mr. Orr seems to be giving himself some wiggle room here by reducing the size of rate cuts of just 25 basis points from the 50 basis points they've done at the last couple of meetings, and talking about only July. He's already seeing some signs in the data that New Zealand is starting to come off the worst. Possibly inflation is picking up a little as well. It looks as though the outlook for the second half of the year is not going to be as clear as it was for the first part of the year in terms of lowering interest rates. He's certainly giving himself a chance here to get out of this. And traders are seeing that. That's partly why the New Zealand dollar's come off the lows of the day. And you'll probably start to see it reflected in the yield curve as well in New Zealand. So this could be a bit of a tipping point here where traders cannot be as confident that New Zealand yields are going to come down as quickly as they thought just 24 hours ago.
Mark, we did also wake up this morning to news that President Donald Trump potentially is going to introduce a 25% tariff on autos, drugs, chips. Is the market already over this? I mean, are we seeing much reaction, or are we kind of finally seeing, I guess, investors taking these kinds of announcements a little bit more in their stride?
Well, if you take the closing of the U.S. equity markets as the reaction to Mr. Trump, then they don't seem to be too stressed about it. We're pretty close at record highs for American equity markets. They don't seem to be too bothered. European equity markets are near record highs as well. Certainly from that point of view, even today, if you look at what's happening in Asia here, we had Hong Kong stocks opening lower. They're gradually clawing back. They'll be back into the green pretty soon as well. It sounds as though, in general, equity markets especially seem to see these as potential threats. They may or may not happen. They're being pushed out way. I mean, April, there's so much can happen between now and April anyway. So who knows? From an investor's point of view, if it's not happening in the next 2 hours, they don't really care. And there's been so many of these things thrown up in the air. I don't think anyone's going to take it too seriously until it actually whacks them in the face and they say, yes, these tariffs are going to happen right now, and these are the exact amounts, and these are the people that will be affected. Until then, I think most investors, especially in the equity market, will look past it.
Yeah, if only the U.S. president was as clear as the RBNZ governor, and that's a sentence I never thought I was going to say. Mark, just more on the China story. This reversal in prices right now, so we're about 40 minutes, 50 minutes, going 50 minutes onto the cash market session right now. We're going to show this chart coming through as well. Mainland investors have now, in fact, turned net buyers after being net sellers for the first few minutes or so. I'm just going to cue to my producers here. That's chart 1626. Thank you so much. Let's bring that up there. Mark, how much runway does this tech rally have to go in your view, short term?
I think one of the things that we've learned, if you've been following Hong Kong markets especially over the past couple of decades, the ability of Hong Kong and China markets to some extent to extrapolate more than you can think is reasonable is pretty good. So we've, on the high side, on the downside, Hong Kong equities have shown before they can go way, way beyond any reasonable assessment of what is a good rally. Don't forget, H shares had a few years ago we had that 19 consecutive days of higher closes in the H shares on very high trading volumes. You're seeing high trading volumes coming through again. And if you also think of what's happened since China first started putting clampdowns on tech companies and other related things, the markets have come down so far. And you take a company like Alibaba, it's still trading a huge amount below where it was just 3 or 4 years ago. So if this is the beginning of some kind of catch-up, if tech companies are now seen as the darlings again in the greater China space, then there could be a very, very long way to go. They still have to deliver, of course. They still have to turn these AI products into real money. They have to show that they can get some revenues out of it. But certainly in terms of where we are now and where we were a few years ago, investors are probably thinking to themselves, well, there could be a lot more upside in this, and they're going to stay in, no matter whether the market looks overbought or not in the short term. They are looking way, way ahead, and they're thinking that this could run for some time yet.
OK, Mark. Can these potential China darlings deliver? Let's keep watching. That's MLive strategist Mark Cranfield there. And a reminder that tomorrow on Bloomberg Television, join us for a rare live interview with a senior official from Australia's central bank. We'll be asking RBA Deputy Governor Andrew Hauser why policymakers remain cautious about easing after cutting interest rates this week for the first time in 4 years. That's coming up at 10:15 a.m. in Hong Kong and 1:15 p.m. in Sydney. You're watching The China Show. Good morning. This is Bloomberg. Here are some of the geopolitical stories we are following this morning. President Trump says he will probably meet with Russia's Vladimir Putin by the end of the month. That's after the top US and Russian diplomats raised the possibility of broader cooperation following a meeting in Saudi Arabia on steps to ending the war in Ukraine. Marco Rubio and Sergei Lavrov promised to have high-level teams work on a truce that's acceptable to all sides. Rubio has since said that sanctions on Russia will stay in place until a Ukraine peace deal is reached. The Vatican says Pope Francis is being treated for double pneumonia after scans revealed the condition in both his lungs. The 88-year-old has been in hospital in Rome since last Friday, and church officials now describe his medical situation as a complex picture. The Vatican has asked for prayers for the Roman Catholic spiritual leader, who's been head of the church since 2013. President Trump says he expects to impose tariffs on cars, chips and pharmaceutical imports of around 25%, with an announcement coming as soon as April 2nd. Roughly 8 million passenger cars and light trucks were brought into the US last year, accounting for about half of US vehicle sales. Trump has already announced 25% tariffs on steel and aluminium. Those are set to take effect in March.
Yeah, and Rebecca, you were pointing this out earlier to the team, that car makers in Japan really leading to the declines that we had in the markets yesterday. And as you can see today, that's still the case in many of the big name car makers here in Japan going into the lunch break. So in the order of about, let's call it 2%. And certainly when you look at what the benchmark is doing in Japan, this does seem to be indicative of an idiosyncratic factor that markets are continuing to trade on currently. Right, let's flip the page back to the Chinese markets, and Hua Hong Semi continues to give us something to think about. Really, we're trying to figure out why these gains are in the order that you're seeing them right now. Fantastic gains again, by the way. So we've had similar moves in some of these names of late. Will Semi's up 7%. TSMC, of course, down about 0.9 to 1%. This is over in Taiwan. Very, very quickly, NAB. That's the big mover to the downside. In fact, financial, generally speaking, in the Aussie markets are down substantially today. That's the pull coming out of that. And, of course, the other one is Santos there. That's an oil play, 4.5% also in the Sydney session. We'll leave you with a look at Japanese benchmarks going into the lunch break. Plenty more ahead here on The China Show.
So what we're seeing really, this rally is really a combination of the pivot in stimulus stance that began in the fourth quarter last year. I think plus the announcement of DeepSeek that took place 2-3 weeks ago, that sort of reminded global investors that China remains the interesting place to find good companies, and it's not a story that you can completely write off.
AllianceBernstein's John Lin there on the recent rally in Chinese stocks. But not everyone is getting that excited about this rally. Muddy Waters founder and CEO Carson Block says investors should not be so quick to jump back into China. He spoke exclusively to Insight anchor Haslinda Amin at a Bloomberg special event in Singapore. Just take a listen.
What I've been banging the drum about for 15 years is that the accounting of these companies, especially the ones that are public outside of China, the numbers cannot be trusted. And we are in a world where I think that matters less and less, a world that is dominated by passive flows, where active investing is receding or has been receding for quite some time. So maybe that matters less. But then you layer on top of that the geopolitical risk. It's funny, this morning we had a meeting with a potential investor, and the meeting was going really well, but at one point they told us that they were pretty invested in China, they were excited about it, and they look at things like that based on geopolitical or assessments of governments, et cetera, and government policy. And at the very end, I made such a mistake from a sales perspective because they asked, well, what do you think of China? And, blah, 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 blah. I think Xi has been an absolute disaster for China. And literally the response was, well, okay, on that note, thanks for coming. So I think that, if you're willing to take the risk that you wake up one day and, China has gone to war to try to retake Taiwan or has barricaded the island, and that could lead to a kinetic war. If you're willing to take that risk, great. There's a price for everything. There's a price for that risk. I've been seeing Westerners like that for a couple decades, not really understanding what category of uninvestable China is in. They'll say the right things from time to time, lure the capital in, and I think that is part of the geopolitical strategy here, because China has always sought to co-opt opinion leaders and key people who are key economic and business leaders, always sought to co-opt them in the West, basically the Western elite. So the more that they can get everybody, levered to China, I think Xi is viewing this as a negotiating tactic should he ever make that move on Taiwan. So, Yeah, I don't know. I think it's different.
But Xi has always talked about making that move on Taiwan, and he hasn't. And perhaps there is sense in that. And perhaps for investors, there is comfort to take from that. I mean, you talk about how it is uninvestable, but how do you view the rally we've seen so far? I mean, as a trader, as an investor, you're losing out on this rally.
Well, I don't know. I sleep a little better at night, I'd say.
Well, you are hearing the right murmurings from Xi Jinping, I mean, on the back of the meeting he's had, for instance, with the tech leaders. Perhaps, you know, he's realizing that he needs to do something differently.
Well, and it's not to say that this is unique to China, but, you know, I lived there for a number of years, and I was actually lied to a decent bit. So and just because China hasn't actually made the move, I mean, that has more to do with military readiness. Taking an island from a military perspective is incredibly difficult.
There we go. That was Carson Block, Muddy Waters founder and CEO, with his Linda in there in a recent event over in Singapore. Right, speaking of Chinese tech, let's have a look at where we are about an hour into the cash market session. There we go. We're looking at, well, I think to the downside, you have Baidu down about 2.5% out with earnings yesterday. In a couple of moments, you'll see, of course, some of the ratings coming through from the sell side as it pertains to the stock. As we wait for that, and as you look at that, let's bring in Robert Lee, our senior analyst at Bloomberg Intelligence, to take us through well, first your take on the earnings, but I think more importantly, how soon can this company realize really the AI story, and when does that show up in these numbers?
Sure. Going back to the early days of my career in London, there's something called Jam Tomorrow, a company that always has great potential promise, but, you know, it won't deliver this year. It's going to be next year. And then when we get to next year, it gets pushed out. So I think that's the sort of scenario we're with Baidu at the moment. And it has two fundamental problems. As you're aware, it's referred to historically as the Google of China. That's the cash cow business that funds its AI investments. But that's under heavy attack because there are alternative means to search these days, and also all these alternative chatbots are coming up with search functionality built in, including DeepSeek. So their core business is under sustained and heavy attack. And we saw weakness in the ad business, quite substantial weakness in the ad business as a result. And then on the AI side, obviously competition has caught up substantially. It's, low barriers to entry, DeepSeek being the most recent example, but they're just not monetizing at anywhere fast enough rate. The cloud computing numbers did come through a bit better than expected, but that's, is a dilutive business to the margins, and overall margins actually disappointed. So looking at it in overview, there are a weak set of numbers, no real visibility on when the AI monetization will come through, and at the same time, their core, cash generative, cash cow business is under heavy attack. So I think that's why we saw the stock price reaction last night.
I just want to shift focus a little bit on the Intel story. We did see this sort of pretty hefty rally, biggest since 2020. It's all about speculation on this potential breakup that could involve TSMC, could involve Broadcom as well. Just explain what we know so far, what we don't know.
Okay, in brief, abbreviated history lesson, they are an integrated device manufacturer going back to the origins of the semiconductor industry in the 1960s. They did everything from designing the chips to fabricating to packaging. That is not a sustainable business model in this current environment when your core market is PCs and servers, which is an ex-growth market. They failed to tap into mobile phone growth earlier and smartphones. They failed to tap into AI accelerators. So there's no real growth driver in their business. So I think what these speculation really, these rumoured stories are telling you, if there's any truth in them, that a breakup of the business is probably most likely. What does it mean for TSMC if they did end up buying Intel's fabs in the States? I guess that would cause them some short-term issues, given the productivity issues that Intel currently has. Whether TSMC can make a good job of that in the long run would remain to be seen. But I think the advisors are obviously coming up with a range of options at the moment. A breakup probably looks more likely. I don't think you can say any more than that. And from a shareholder point of view, sum of the parts is greater than the whole. Could that realise a value realisation? Quite possibly, and that's why the share price reacted positively.
Yeah, a breakup is likely. You sound like my ex. Just back to this equity rally that's taking place in Hong Kong, right? So a lot of people are trying to debate, is it cyclical? Is it is it more structural flows coming into the market? Is it a momentum trade, or is it a fundamental trade, for example? What's your take on this Hang Seng tech rally that's taking place? Are investors buying into hope or more into earnings here, future earnings?
To quote the great Chuck D, don't believe the hype, because I think it's more based on hope at the moment, and the chance of, any re-rating, and Chinese tech stocks were cheap on any measure, either historical or relative. So any re-rating driven by inflows into the market, and it was an underperforming market, ultimately has to be followed up by, earnings revisions. So based on our view, I think that is looking highly unlikely. DeepSeek has obviously been highly innovative, shows what an innovative country China is on the AI side, but monetization remains the key challenge, and I think we'll see very limited evidence of that coming through. So I think it's a locally driven rally, driven by rotation, attracted by cheap valuations. I very much doubt that we're going to see the follow-through on the earnings, and Baidu being an example of that. So that, makes things vulnerable to some extent at some point.
Right, Robert, thank you so much. Robert Lee there, out of Bloomberg Intelligence, our senior analyst. Now, while Robert is clearly not convinced and happy with the rally taking place, some people are. In fact, some of the founders and the big executives there, good sport, have really seen their riches inflate. So year to date, this is a look at, and this is based on data out of RichGo. Year to date, your big winners are Lei Jun, you have Colin Huang, you have Pony Ma, and this is a net change in their net worth based, of course, on the recent the data that we have in the rally that's taking place in that stock. Robin Lee, we talked about Baidu, 0.4%. Also, a billionaire right now, it's minted a new billionaire, and that is James Peng, of course, self-driving tech entrepreneur. Rebecca.
Yeah, let's bring in our Bloomberg wealth reporter, Diana Lee, just to break down really where we are seeing all of this wealth being directed or redirected. Just talk us through, first of all, the latest catalyst for the shares that we've seen in Pony AI.
Yeah, of course, the Pony AI rally really came amid this broader Chinese AI tech rally. And even if the company is actually listed in the U.S., we see the stock surged about 23% in the last 2 trading days. And that brings about 41% since its debut in the NASDAQ exchange. And of course, if we know that James Peng actually holds about 17% stake in the company, and that translates to about 1.1 billion in his net worth. And in terms of catalysts, it's really, DeepSeek is an important part of that story. We see its cheap AI model really elevates China's position in the AI supremacy race. And of course, a lot of investors are reevaluating the Chinese AI tech companies as a whole, and some argue that it's a bit undervalued. And of course, we see President Xi Jinping met with a bunch of important business leaders from China, and their industries ranges from AI to tech to chip makers and electric vehicles. And all of that just signals this government support for the private sector, especially the tech and automobile industry.
So let's have a look at the company specifically. What does the challenges look like here for the company as we look ahead and as people try and understand how much this company is really worth?
Yeah, so in terms of robotaxi and self-driving, it's always part of this heated battleground between China-U.S. tech race. And we know that Trump is expected to be tough on Chinese companies, especially when there is cybersecurity and data privacy concerns. And we know that U.S. already unveiled some rules to limit the advanced chips from entering China. And that's an important component of the self-driving technology. And of course, we see previously Biden administration proposed a rule to limit the sales and imports of Chinese smart car components from coming to the U.S. So you see a lot of geopolitical tensions of these supply chain issues and market issues for a company like Pony AI. But the company obviously recognized those challenges because the CEO James Peng told Bloomberg that he will be focusing on the international operation outside of the U.S., including, Singapore, South Korea, and the Middle East. And of course, they will keep trying to diversify their supply chain, especially their chips.
Right, setting your sights, I guess, on that global market there as well. Bloomberg wealth reporter Diana Lee there with the very latest. There's plenty more ahead. Stay with us. You're watching The China Show. Good morning. You're watching The China Show. Right, in some of the corporate news that we are following this morning, UOB has announced a $2.2 billion package to distribute surplus capital over the next 3 years. Southeast Asia's third largest bank will introduce a new share buyback program and plans a special dividend. UOB's fourth quarter earnings met estimates, helped by growth in lending, even as non-interest related income remained flat. Elon Musk's artificial intelligence startup xAI has debuted its updated Grok 3 model. The company says Grok 3 beat OpenAI, Alphabet and DeepSeek's models across math, science and coding benchmarks in claims that are yet to be independently verified. xAI also introduced a new smart search engine called Deep Search. Ford is eliminating stock award bonuses for many of its middle managers, trying to boost performance amid declining profits and high costs. Ford is forecasting a year when earnings before interest and taxes will fall by $2 billion or more. It's also overhauling its EV unit after projecting losses of up to $5.5 billion this year for that business.
Right, what time is it now? 10:45, so in about an hour and 15 minutes, HSBC will be inundating our headlines here in the terminal. Fourth quarter earnings are due, so we're looking at everything from metrics to perhaps a buyback, more on the buyback, and perhaps some commentary on some of the massive restructurings, of course, that the bank is undertaking right now. For a closer look at some of these areas to watch, senior analyst Francis Chan out of Bloomberg Intelligence is here with us to talk us through his expectations for these earnings coming through in about an hour from now.
Sure. We believe the expectation would be really high. Just to give you a point of reference, the valuation of HSBC as a stock has gone up more than 40 billion since the new CEO, Georges Eldery, came to the office and announced different kinds of restructuring plans, and much of the cost cutting, if it is like a conservative estimate at the low end, would have been priced in. Now I think more delivery will be relying on maybe the top line. And of course, if there will be any more news to the enhanced capital repatriation plans, that will be a big plus to what they already have so far.
A big focus, Francis, is of course going to be this restructuring. There has been sort of comments on how quickly, in fact, the new CEO has moved to enforce that. How urgent is it that kind of HSBC is really getting on with the job here?
You see the pace of changes moving really fast over the past 3 months or so. Like yesterday, there have been another 40 investment bankers as reported being let go in Hong Kong. And there are a few moves which happened a few months over the past few months, which makes a lot of sense. For instance, they're trying to trim the investment banking business in the States and Europe. From the very beginning, those operations really contribute a very small share of profits to the global banking and markets operations. And 2/3 of that division's earnings could be coming from Asia and Asia only. So they try to pivot back to Asia for those resources. It makes perfect sense. And also, if you look at the operations, the cost-income ratio, for instance, in North America, in Europe, the wholesale banking part of it, the cost-income ratio is as high as 80% versus the whole group's 50%. So obviously, those divisions in terms of ROE, in terms of cost, they're not as efficient, and there could be a lot of fat to cut.
Okay, thank you so much for joining us. We'll keep an eye on that. Bloomberg Intelligence senior analyst Francis Chan there. There is plenty more ahead. Stay with us. This is Bloomberg. Temu's use of a near-century-old loophole to ship its items directly to the US duty-free has made it the world's largest online dollar store. Now, President Donald Trump's second-term tariffs are threatening the key to Temu's success. For more, let's bring in Bloomberg Asia Global Business Managing Editor Rachel Choong. Before we get into sort of the existential crisis that Temu may be facing, just lay out why it was that Temu was able to build this pretty extraordinary success and in a relatively short period of time.
Mm-hmm. So Temu really followed that successful model that Shein, which is that China-founded fashion brand, pioneered, which is that instead of shipping these goods to U.S. warehouses and then delivering it to customers from there, what they did was bring all of these factories together, put their products in warehouses in China, and then ship them straight from China to the American consumer directly to the doors of the consumers who are buying these things online. And why that was so smart was because it really avoided the extra tariffs that Donald Trump in his first term and Joe Biden kept on Chinese goods, but they took advantage of this loophole that neither president previously addressed, which is that any amount less than $800 that any American person buys online would not be subject to any tariffs at all.
So are the factors that contributed to how successful and quickly the companies become successful, do those factors largely go away? Like, how do we look at that, the path ahead?
Right. So what's really interesting now, because Temu and Shein have both become so successful around the world, is that Donald Trump has come in and said he's now finally going to address this $800, what they call the de minimis rule. He's going to remove that. We don't know when it's going to be implemented, but he's already announced the intention of removing that. And so what that means is that the entire model, which allowed all of their products to escape any sort of customs duty, that's now under threat. And in the near term, we've already seen, for example, in the 5 days after Donald Trump said that, the traffic on both Shein and Temu dropped, I think, something like 30%. So consumers are wondering, this sort of dollar store, super cheap prices, is that really going to last for them?
What are the potential options here for Temu? Is there a way to get around this, or is this a question of just opening up and finding other buyers?
Right. So, what we're hearing from factories is, Shein, for example, is asking some of them to move to Vietnam because this de minimis rule is still there for any other country. And then we're also hearing that, Temu is asking merchants to essentially do the shipping themselves. They don't want to pay for that anymore. They want them to shoulder that cost. And then, as you said, of course, what we're seeing for both of these platforms is in the long run, they're going to shift away from that U.S. consumer. They're going to look at the Middle East, Russia, Southeast Asia. People everywhere want cheap stuff. So they do have consumers in other parts of the world.
Rachel, fantastic piece this one, I have to say. Rachel Choong there, Bloomberg Asia Global Business Managing Editor with today's Big Take into the world of Temu. Right, just back to markets. About 90 minutes back here, the January home prices came out. New home prices across 70 cities. So I think the headline coming through here when you look at either the market reaction or the lack of it is really things are just getting better. They're getting less bad, I think.
Yeah, it's
contracting
slightly less worse.
Yes,
but that's kind of what we're looking for, right? This slight stabilization. And I think there are quite modest hopes, honestly, about when we actually finally start to go into the green when it comes to those new home sales. We're just seeing that very, very slowly improve.
Yeah, and I think it's interesting to, this is a survey of, I believe, 70 cities, major cities. And it's worth pointing out that still more than half of these cities are still seeing month-on-month price declines, right? So at least in terms of the mindset here, we haven't quite turned the corner on the statistics and matches yet. But that being said, 24 cities are now posting slightly better month-on-month gains in home prices, too.
Yeah, 20 months of declines, that sort of tells you all that you need to know.
Things are getting cheaper on the home price front. From this story, we will just turn the page on the markets and Intel suppliers. And this one's potentially a massive one. Just add, if it does happen, of course, that Intel then becomes fabless, it certainly adds then to this sort of growing list across the last few decades or so of companies just really not making the mathematics and economics work of really having a fab that is just expensive to maintain over the course of time. Anyway, Intel suppliers on your screens right now.
And tomorrow on Bloomberg Television, join us for a rare live interview with a senior official from Australia's central bank. We'll be talking to RBA Deputy Governor Andrew Hauser. You're watching The China Show. This is Bloomberg.